Hey guys, what's up, how's it going? My name is Rob and welcome back for another video. In today's video, I'm going to be giving you guys a weekly update on my stock portfolio, my Canadian dividend growth-based stock portfolio on Wealthsimple Trade. So we'll dive inside the video and I'll show you guys how my stocks have been doing for the past 2 weeks or so. And just really quickly, before we hop into that, I just want to mention really quickly, I did do a second round of stock portfolio reviews on Blossom. So if you guys don't know, I've been reviewing some viewers and some users on Blossom stock portfolios. Basically, the way it works is I do a post on Blossom. I get you guys to comment on there, and then I pick your portfolios and we do some mini reviews, and then I publish them on this YouTube channel. So if you missed the previous videos, I did make a playlist you guys can check out. And if you guys want to be included and get your portfolio reviewed and see it published on this YouTube channel, check out Blossom Social. There's a link in the description of this video. Sign up, create an account, link your stock brokerage so I can actually see your portfolio, and then make a post on the post I recently just did, and then you guys will be included. There's a few questions I put on there to make things a little bit more easier to help me understand some things like your goals and whatnot and what you're trying to do with your portfolio, because that was an issue we had before. So definitely check that out if you guys want. Once again, link in the description of this video. Check out the post I recently just made on Blossom, and you guys can be entered. And if you guys missed the previous portfolio reviews I did, I'll link to the playlist in the description of this video. And of course, if you guys enjoyed this video, be sure to smash the like button and subscribe to the channel if you guys want to be notified of when I do these videos. Alright guys, what's up, how's it going? Welcome back to another portfolio update. Here we're going to start with going over the portfolio values and whatnot. I'll show you guys how the stocks have been doing and my portfolio has been doing over the past week or so. This is going to be our weekly update like I mentioned already. So first things first, we'll go over the totals we have here. So you have $119,000 on the stock portfolio on Wealthsimple Trade. And that's split between our personal account and our Tfsas. So we're going to go over these accounts really quickly, and then we'll jump inside and I'll give you guys a quick overview of all of our portfolios together so you guys can see everything together. But the first thing here, we'll cover the Tfsa. Now the Tfsa is slowly growing. We're getting there, guys. We're at $99,000. It seems to be going up and down every single day, but we're almost at that 100K Tfsa. And I'm sure once we get there, it'll just go away anyways because the market will dip or something like that. But once we hit there, I'll let you guys know because that's going to be super sweet. So at the time of doing this video, it is Saturday. You guys might see this video sometime on the weekend, so Sunday, Saturday. I'm not too sure exactly when I'm going to publish it. So obviously the markets are closed, but this is just a quick little recap of what's happened, during Friday as well as the past week or so. So the one-day return for Friday was negative 0%. So we got a little bit of a dip on Friday inside of our Tfsa. The 1 week return is about 0, so not too much happened over the course of the week. A little bit of a gain, I guess, with a little bit of a dip, so nothing really happening too much, kind of basically cancel each other out. The 1 month return is 3% for the Tfsa. So since about mid to January to where we are now, which is February 18th, we've seen a 3% gain. So once again, by keeping our money in the market and getting those dividends and different things like that and the compoundness, we did get a 3% gain, which is pretty sweet. The past 3 months have been once again around that 3%. And the 1 year return is about negative 0. So we're kind of breaking even on the 1 year return, and the all-time return inside the Tfsa is about 12%, just shy of under $11,000. So we are starting to get a bit of a gain here, and you can see kind of like, I would say starting towards the end of December, actually since the beginning of January, our portfolio did grow quite a bit in value. Now I did put a lot of money in my portfolio here too, so there's a lot of deposits in there, but the market, we did see a bit of a gain, which is always nice to see. The personal account, which is more focused on Canadian stocks, we'll talk about next. And this one is going to be a little bit interesting. So the 1 day return for the personal account is 0%, so nothing really happening for our Canadian stocks. Over the course of 1 week, the Canadian markets did see a bit of a gain at 1%. 1 month return is 3%. 3 months return is 4%. So we've seen our Canadian stocks actually start to rise at the beginning of the year, which was the January 1st of 2023, and we've seen a nice little gain there. 1 year return for the personal account is negative 2, but all time it is up 6%. Once again, this is very dividend kind of Canadian focused account, and at some point in time, I might take some of my personal money from my personal account and put it into Tfsa. I just kind of have to figure out my contributions room and kind of see where I'm at. But somebody did mention that in a previous video, and it might be something that I'm going to do. We'll have to wait and see, and I'll let you guys know if I plan on doing that. So anyways, let's jump inside, track your dividends, and we're going to kind of look at all my portfolios together as a whole. And just really quickly, before we kind of finish up the portfolio section of the video, we're going to do a quick little recap of all of our portfolio, like my entire portfolio together, and then look at each individual one. So this is the summary of all of our accounts together. This is my account, my fiance's account. This is basically our net worth in our investments. So we have about $131,000. Portfolio yield overall is 3.47. and our yield of cost is 3.6. Annual income is 4,554, so that's $4,000 and $4,500. So it is slowly getting there. And our different accounts we have here, we'll go through these one by one really quickly. So the ESOP is for my employer. I work for Loblaws. We have about $731 that we have going into that, and that's a portfolio yield of about 1.36. It is a growth-based stock, so obviously not a lot of yield there, and the annual income is pretty low, but this is kind of more of a growth-based long-term kind of thing. And since I am basically getting free money for that, I might as well buy it, and I love Loblaw, so there's nothing wrong with that. Personal account here is the personal account we already shared with Wealthsimple, so that one's here on here as well. We have a 4.61% yield. Obviously more Canadian dividend stuff focused, so we do have more yield. There is also a little bit of growth in there as well, but mostly Canadian stocks. My fiance's Tfsa is very simple. It just holds the big ETFs that I have. So she has about $11,000, just under $12,000 there. Combination of growth as well as dividend yield, and then my Tfsa here as well is also here. So all those accounts added up together, we get the full total, and I just wanted to show you guys a quick little overview of all of our stocks together. This part of the video, I'm going to document my my buys as well as the deposits that I made inside of my account for the month of February. So this is something I like to do. So we'll kind of cover the week. Obviously, I didn't publish a video for about a week and a half or so. I've been a little bit busy, but now that things have kind of died down a little bit, I can actually finally get a video out. I did mention this, I think a video or two ago, that I'm kind of in a busy place in my life right now. So I'm just really focusing on getting these weekly updates and maybe doing the portfolio reviews. And that's kind of my focus right now. But anyways, we'll cover the fractional buys, the different buys, the deposits and whatnot inside the account. So let's go over to, the beginning of February. We're going to load here. We have lots to go on here. So I'm still really focusing on putting money inside the Tfsa to max that out. So we're just really, a lot of the stocks we're buying are just the regular stocks that we hold. And that's what I like about having my stock portfolio the way it is I don't really have to think too much. I can just buy whatever I want to buy. And right now we are focusing on growing some of the yields, growing some of the covered call ETFs, but also buying, kind of keeping a nice healthy hold of everything. And once again, if you guys want to see my actual stock portfolio, my pie and everything, and where my stocks are, check out my account on Blossom there, and there's a link in the description of the video, as I mentioned earlier, if you guys want to see that. But more or less the same thing, buying lots of the covered calls, making some pretty big deposits on a regular basis. I'm literally going inside my account every other day whenever I get paid or something like that, once or twice a week, and just throwing money into the market. And once again, I am kind of dollar cost averaging into AQN. That's probably going to be one you're going to see a lot on here, but you'll notice that it's just little bits of here and there. Like if I have $50 or $100 to buy into the market, I'm only putting like 10-20 bucks. Might as well put money in AQN. I do believe in it long term, and since I did have a big holding of it, I kind of want to, I really do think, like, if you want to make money with AQN and you believe in the company, now is the time to do it. So again, I understand the risk. We're just going it slowly, but that's one of the big focus. Another stock I am focusing on is some of the more growth-based companies. So CNR was a company that is very growth-based, and I really like its time portfolio. I want to build that up to kind of make it more mirror ones like Loblaws as well as ATD and stuff like that. I kind of want to balance those ones out. So I have in mind a lot of CNR, and that is once again more of a growth-based Canadian company. So that's kind of that focus there. But once again, a lot of CNR, a lot of AQN, and some HYLD is kind of the main focus is what I'm doing, and that's kind of what I've been buying for my portfolio. So, the cover calls, some of the growth, as well as taking, a little bit of riskier plays with AQN, which is kind of like just kind of dollar costing average in there, because I do really believe that if you believe in the company and you understand the risk, we're going to make a smart little calculated risk play with AQN. And of course, since this channel is focused on dividend investing, that's the big thing here. We will cover the dividends for February. I can't remember if I did them in the last video, but I will do them here. We'll do a quick recap of everything, because I don't think we had lots in the last video, and I haven't done a video for like a week and a half, so a lot of these probably aren't even going to be on there anyways. But our first dividend we got for the month is from POW, that's Power Corporation of Canada. Nice big dividend. They have a very high yield right now of $8.57. VDY gave us a dividend in our personal account for $21, as well as our TFSA for $112. That's a nice chunky dividends. And yes, I did reinvest these dividends. That's kind of what I'm doing right now. I'm not spending any of my dividend income unless I have to, but it's there if I ever need it for something, right? But anything we're not using, we're just reinvesting, and I think that's a smart way to do it. We got some dividends from HYLD, so in our personal account, $16, as well as in our TFSA and our Tfsa from HDiv as well. So let's kind of look at the covered call ones here. So $16 in personal account from HYLD, $56 in the Tfsa, and then another $3 from HDiv, and another $6 in the personal account. So that's quite a bit. If we add that up, that's going to be about, I don't know, $55 plus about 60 or so, 75, 76, maybe like $80 or so from the covered calls. So we almost hit $100 a month just from the covered calls, which is a relatively small holding inside our portfolio. So you can see how like just holding like a small percentage of portfolio in some of these high yield funds, even if you do have more of a growth-based portfolio like myself, can kind of bump up your yield a little bit, and that's the focus of them. But anyways, that's just the dividends. We'll jump inside the monthly income, and I'll show you guys how our dividends have been growing month to month. And of course, quick little update on the monthly dividend income. So you guys can see how the portfolio basically has been growing since we first started investing back in January of 2020. The portfolio has gone through a lot and gone through some changes, but I'll give you guys a quick little graph here where you can see a quick overview of, like, you know, when we first started here, we were just getting a couple cents to a couple dollars. Fast forward all the way to where we are now. A lot of ups and downs because we do have quarterly payments. So the quarterly ones here are these big spikes that happen inside the portfolio. And I did make a big deposit. I basically took my old Tfsa, combined it into my new Tfsa, so we did get a big jump here. That kind of, you see like this big rise here. This is because we had a big chunk and some US ETFs and whatnot, and we did put those into the same portfolio. So that's why we get that big jump here. But on the consistently monthly basis, you'll see that there is a bit of an increase here. Like, it's slowly getting up there. If you were to draw a line right from about here, let's say about here or so, which is a monthly income payment, you'll see that there is still an increase right from here all the way up, that nice little increase there to month number 36. So we're on month number 38, which is February 2023. January was our biggest month ever, I think. Actually, yes, it was. We get $522 inside the portfolio, so that was absolutely crazy. Just for retrospective of that, in January 2022, we made $369, so quite a bit increase for January of 2023, and then February was $225 so far. So last year, February was $129, so we'd already beat that. So you guys can see it is consistently growing, and total dividends all time is $5,451 inside of our portfolio. And just a little quick update on some of our dividend increases. A couple videos ago, I think I did do I don't know if it was the last update or the last weekly update or the one before that. I did a quick basically recap of all the dividend increases for all of our companies that kind of happened at the beginning of the year. And Manulife, one of our holdings, did do a big dividend increase recently. So the yield of Manulife right now is 5.38%, and they did do a dividend increase of about 10% or so, which was their most recent dividend, which is going to be going out in January, February, March. So that's March 20th is going to be the payout date. So we've seen a 10% increase from our dividends, which is quite a bit, right? If you look at the actual stock itself, it's got a 5% yield. So 10% of that is like what? 0.5% or something like that, if my math is correctly. So that's a pretty significant dividend increase. So once again, you know, that's really compounding and growing. And the last thing we're going to talk about in today's video is I'll give you guys an update on the total return for all of our stocks inside our portfolio. Alright, so here's one of the most important concepts to understand when it comes to investing is the total return of a stock. And this is why I now use Wealthsimple to kind of show you guys this, because I feel like, you know, inside when I do my portfolio updates at the start of the video, you guys can see how the entire portfolio is growing. But I like to show you guys how each individual stock basically contributes to the total return of the overall portfolio. So once again, just a quick little recap on this. We have the tickers on the side here. The only real columns you need to pay attention to is the revenue column here, and then the total gain here. The total gain here is going to be a combination of dividend income or any revenue, as well as the stock growth or the unrealized stock growth, if you will. So VFE is going to be the first stock we're going to talk about. We have dividend income of $1,000 for VFE. Total gain $1,584, up 2.85%. That's the dividends reinvested as well as unrealized stock growth or stock appreciation. VDY is the second stock we have here. In fact, I think we can organize this per, let's see if we can organize this per the highest amounts here. It doesn't look like we can, but it looks like we can focus on the ones that are performing the best, I guess. So, you know, we covered VFE. Let's cover VDY really quickly. So VDY, we have $2,277. So lots of our dividend income coming from VDY. Total gain of $6,384 combined of stock growth as well as dividend income. That's up almost 21% all time. And this has been probably our biggest ETF we've been investing into on a regular basis. It's just performing really, really well. Keep in mind the U.S. markets did take a big hit last year, so that's why VFE is down. But of course, over time, VFE should be one of our higher performers. One of our best stocks, our best dividend stocks, which is a combination of dividend growth, dividend yield, as well as stock appreciation, is TD. I love the banks. I think they're one of the best holdings to have. So TD, we have $390 from dividends. Total gain of $1,271, up 25%. That's one of our best performing stocks, doing really, really well. One of our, actually, I think our best performing stock, and this seems to keep changing with TD, is ATD. So Couche-Tard, up about $14 in dividend income. So it's not a dividend stock, but there is dividend growth in there, and it will help to grow the total growth of the stock. And it is a small holding, so we have to understand that. But I am looking to expand upon it over time. So that's a total gain of about $1,000, up 28%, actually killing it there. So ATD is one of my, I think, projecting into the future, ATD is, if you want growth, and you want, like the nice dividend growth as well, ATD is definitely a stock to keep an eye on. Going down here, we have actually an interesting stock I talked about earlier, Manulife, with their dividend increases. This stock has actually performed quite well for me, even though it's more of a higher yield stock. So Manulife has we got about $129 from dividend income, total gain about $200, up 21%. We bought a lot of this during the pandemic, when things were pushed down, and it's been collecting that dividend income as well as some significant dividend growth over the past couple years, has really made this actually perform quite well at a 21% total gain. TELUS is a company I am focusing on buying too, up 5%. CNR is another growth-based company we've been, buying a lot of, so they're up 5%. Fortis, our defensive utilities, is up 6%. HDIV, our first cover call, is up 5.44% all time. I have been buying more of this recently. Severia Corp is up 13%. This is the stock I am looking to buy, so I might actually consider selling. I've been looking to sell, and just put it into some of my other stocks. So I might actually look to selling Severia Corp right now. It is actually up 13%. So that's actually not a bad gain. It's such a small holding, I gotta just get rid of it. So that one's gonna have to go pretty soon. I was just basically waiting for it to recover a little bit. With a 13% total gain, I probably feel comfortable selling it and putting it into whatever. And then at the bottom here, we have some of our smaller ones, or ones haven't been performing as well. So C&Q is down 11% all time. Canadian Tire is up 11%. Canadian Tire is up 8%. And then we have the negative ones here at the bottom. So we have Power Corporation of Canada sitting at about 0 all time. I haven't been bought in that recently, but it's been doing well. It is, once again, as the dividends kind of roll in, it's going to help. And as it recovers, I should see some good growth in this company. HYLD is down -6%. Once again, it got hit hard last year. U.S. markets are still recovering, but as that dividend income comes in, because we locked in such a high yield at that 13 to 14% range, we should see that increase. And when the U.S. markets recover, we should see some growth. But I don't really care too much because we are relying on the passive income from HYLD. So whether it recovers or not in terms of stock appreciation, sure, it's helpful, but I haven't really focused on the dividend income. So it doesn't really matter too much. As long as we lock in that 13-14% yield, that's where the return comes from. We just hold it forever. We use the dividend income for whatever we want. And then going down here, we have AQN. So we've seen a bit of a recovery from AQN. Like I said, I've been buying it on a regular basis since it's been down. We were actually down -28% all time. So we've actually seen a little bit of an increase there. So hopefully things keep going the way they are. And once again, I will be putting small amounts of dollars into AQN, and we still have that dividend yield of about 5%, which is going to compound and grow as well. So it's been doing pretty solid. It looks bad on paper, but I do believe there's some opportunities for AQN if you do it in a smart way. So anyways, guys, that's a quick update on the total returns for our stocks. Hope you guys enjoyed that. Alright guys, that's it for today's video. Hope you guys enjoyed it like usual. Let me know what you guys think in the comment section. Take care. Have yourself a good week. Hope you guys are enjoying the nice warm weather. It's definitely been nice here. But take care. Enjoy the weather. Have some fun, and I'll see you guys later.